This is another episode of me documenting the day-to-day process I'm taking to achieve long-term consistency in the financial market, and this marks the end of September 2025, and I was able to close out this month profitable, although not a lot. I'm still up, and it's still small steps forward. Trading is a marathon, and I know that's cliche, but it is. It's slow, and it's small steps at a time. You're not just gonna blow up out of nowhere and start making money, start making thousands of dollars, tens of thousands of dollars like this. It is step by step by step. You're slowly inching your way towards profitability, and that's exactly where I'm at right now. And this all started back in June. At the beginning of June, I was probably at one of the lowest lows of my trading career. I was getting kicked out of my parents' house. I had to move in with my grandma, move into Houston, move into a different city. I was at my lowest in my trading. I had no idea what I was doing, and I knew I was repeating the same negative cycles that I've been stuck in for the past, I don't even know how long, half a year. And I couldn't break out of them because I wasn't aware of what I was actually doing. So what I did was, at the beginning of June, was I took a step back and I named it Rebuild, which is why if I go to my accounts in the top right, you can see it's called Rebuild June 2025. And I specifically named it this because I knew at this point in my trading career, this was a pivotal moment. For the first time, I was to take a step back and actually study myself and figure out all the cycles that I held myself back in. And one of the biggest ones, the main constraint, was the fact that I kept starting from zero. Every time I had a model, every time I had a way of trading, I would trade that way for a week, maybe have 1 week of profitability, but then the following week give back and lose it all. And then what would I do? I would tear everything down, and I would see the market in a different way, and I'd start trading in a different way. And what am I doing? I'm starting from scratch. Over and over and over again, I did this so many times. And this is why I put in so much work, but I got literally nowhere. Now, it wasn't until I settled in on one way of looking at the market, creating one language that makes the market make sense to me, and just following that day in and day out, that is when I started seeing results. And now here we are. Ever since I made that change, I've been profitable 3 out of 4 of those months. In last month, I was essentially break even. If we look at how I've been doing in terms of R multiple, we put on my demo trading, I was only down 2R in August. August was a terrible month for me. I mean, look how many red days that I had. Look how many down 2R days that I had. But I still came out with a solid trade to end the month, and I'm only down 2R. July, up 3R. June, up 3R. This month, September, up 3R. So, I'm almost there. Literally. I'm so very close. And I know it, and I can feel it. And I know that you guys who watch me and support me on a day-to-day basis, you can see it too. And it's kind of surreal because you guys know how hard I work. And for the longest time, I was putting in so much work, but not having any results. I couldn't even profit in a back testing session. I couldn't even make money back testing. That's how bad it was. I locked in one way of looking at the market, a language that I've created, just doing the same thing day in, day out. That's it. And I'll show you that process right now. Let's get into it. The optimal market approach. And I am continuously refining this day in and day out. I put the video where I basically break down my daily process on the homepage of my YouTube channel for both subscribers and non-subscribers. So you guys can check that out. But that process has changed since then. It's just getting more refined and more efficient and more black and white, which is what it has to be. So the first thing that I do when I come to the market is I ask myself, how am I feeling? And today I was confident in the idea of higher prices, and I would not sell short at all today. So for me, it's a high probability bullish bias because the higher time frame narrative and the market criteria that I was setting up both agreed, telling me that my protraction buy playbook was likely to play out, although it's not actually what the market offered. The long was still there. The long setup was still there, but I wasn't able to capitalize. So yesterday, today, and even last week, I am framing solid trade ideas. The market is giving me my trade idea and what I'm looking for the day. It's delivering my objective that I have in my plan, my pre-market plan, but my inability to execute that is lagging really hard. So the playbook that I was looking for was protraction buy, where we basically just have protraction in the overnight session. The higher time frame narrative that I noted was I was noting the close of yesterday and what it did to rebalance the impulse swing started on Friday. I've seen this before many times in this all-time high condition. Now that the range is rebalanced, I want to see respect to the obvious 4-hour BISI, which we're getting right now at that moment, pre-market, the market was respecting this level to push price towards Monday high. So I know I have a lot of levels on my chart, but I'm just working with a new way of using the daily time frame. So just practicing with these new levels, because the daily time frame is going to drive that lower time frame, right? But if I break things down for you, I've seen this exact daily close. Price has now rebalanced the impulse swing it made starting on Friday. So my focus is seeing the respect of the daily discounted race to reach up into at least consequent encroachment of Monday's premium wick. So we can see that we have an impulse swing starting on Friday, right? Friday's an up close candle closed near its high. And then Monday, what happened? We opened right at 6 o'clock, started running. We saw a continuation of this. So this creates a new range from this candle's low to this candle's high, and the market's opened high on Monday. So now it has to rebalance that range, which is why we closed lower here. So now that the range has been rebalanced, Tuesday, what I want to see is the market drop down and then trade higher towards Monday premium wick consequent encroachment. That's the target that I had for today, target in mind. So the market criteria to support the idea of retraction by price has respected consequent encroachment, the daily premium wick and the 4-hour gap. The body's closing right on it. I know price is using that level. The low day is also formed right in the heart of London and Asia. Buy side above is smooth. So the low day currently was formed in London, 3 o'clock. And Asia buy side was smooth. It was optimal. Everything was looking good. Everything was setting up right. So my trade plan was, as price sets up high in the current dealing range, I need to see it drop down to a discount, and preferably purge pre-market lows, showing respect to the daily discount wick gradient levels. I'd like to see respect of the high of that daily discount wick, but it's already doing that right now. So the ideal setup for me would be a purge on pre-market buy side that tests the upper quadrant and looking for indication of respect there. And then I also know that today is likely to be increased difficulty because of those 10 o'clock drivers that we had. We had jolts, we had CV consumer confidence. Both of these 10 o'clock drivers typically lead to shitty price action intraday, and that's just what I've noticed from market experience. The days where I do trade this, the days that I do backtest this tend to be shit. And it's also AFP week, and it's also the end of the month, so a lot of factors stacking up, leaning towards the fact that this is probably going to be a difficult trading day. So I'm betting the real move is coming after those drivers come out. So I don't want to take losing long setup before those even come out, like yesterday. Daily objective, being extremely black and white with this, and this is what I'm working on right now because I have a fear of the amount of risk that I'm putting on behind trades. Because I'm not aware of the range, the potential reward for that setup. So I'm looking at the risk amount per setup, and that's scaring me because I'm not even aware of how much the potential reward is. So I could be framing a 3R trade, but I'm not aware of the reward because I don't know what I'm targeting. I don't know what my target is for that session. So I just look at how much I'm risking on the trade and I think, oh my gosh, that's too much. But if I knew how much the range was, then I would think, okay, that's definitely worth the risk. It is worth the risk. And that is the thing about this. We are traders, right? And over a series of trades are we profitable. Over a series. And within that series of trades, the distribution of wins and losses is random. All we do is we show up and we place our hand no matter what. If our model's there, we execute on it. If it's there and the market's telling us we're going to go higher according to our model, according to the way that we look at the market, then all we do is we put a bet on it. It's worth the risk, right? It's worth the risk to find out if the market is going to go higher there. And that's how I'm trying to get myself to think. But in order to do that, I have to be aware of the range or what I'm even targeting in the first place. So I'm confidently aiming for Asia buy side and consequent encroachment the Monday premium wick for low-hanging fruit targets. Now what I actually ended up doing today, or what the market actually ended up doing today, is this is a 15-minute time frame. So we can see that it did deliver Asia buy side, right? But it did not respect the upper quadrant of that daily discount wick. If I go to a daily real quick, this is the premium wick that I was trying to frame a long off of. Now for my protraction buy setup, typically the low a day is made in London. In this case, the market was very, very heavy initially, made a new low a day. So now it's more contingent with my opening range gap bear trap setup where we're looking to be bullish, right? And the market trades below previous day settlement, makes a new low a day and reverses after 10 o'clock, usually around 10:30. In this case, it's around 10 o'clock. So we make a new low a day, and the first long that I take is on a run below a day, right here. So a lot of things that I'm noting, I'm very confident in the bullish bias today. I'm confident that we're going higher. Everything is setting up. Everything is looking good for higher prices. And I'm aware of the range. I'm aware of what I'm reaching for. It's this level right here. So even when we have this strong push lower, can see that for my live trading check-ins at 9:35, I'm still holding on to this idea to see if price finds some ground under the low of day, but we are very heavy initially. And then at 9:55, I say we're still extremely bearish. I'm not sure if this is the fake or real move. At this point, I'd have to wait for the 10 o'clock drive to come out. I'm still not done with the idea. So this is after trade one. After trade one, I was able to get one partial out of it, but the remainder of the position came back. The remaining position came back and stopped me out. So if I pull up the recording from today, 9:30, September 30th, the first long that I take, and I'm not gonna lie, this was ballsy. This was a ballsy trade, but I trust my model and I know that it's worth the risk. I'm not scared to lose $142 on this setup because I know that the potential reward is a lot more than that. And all I do is play my hand, play the cards that I'm dealt. The market's telling me that I could potentially give me the reward from this trade, and it's worth the amount of risk. I'm gonna take it. So in this case, what I see is, at this point in time, the reason why I put risk on here was because the market was still respecting that 4-hour gap that I mentioned in my pre-market plan, right? I noticed the consecutive drives below each candle low right here, and then boom, we had sudden displacement come back inside the range. We crossed the open price of this down candle. That is a change in the state of delivery. It does not have to close over it. ICT has taught this in the 2024 mentorship. It does not have to close over the open price. So that is a change in the state of delivery. And so as the market's trading down, I'm watching the reaction down here, and then I'm buying the market without even getting a close over those down candles. My risk is going to be at the order block low, because if you've been keeping up with me, you know that trade management has been really hindering my ability to maximize my winning trades. So I've not been able to maximize my winners at all because of trade management. I'm getting stopped out early, I'm exiting too early, or I'm holding too long. And on top of that, I'm scared to put risk on behind the setups that I know are likely to work because I'm not even aware of what I'm targeting. So in this example, I'm directly combating everything that's holding me back in one setup. My model is there, I'm taking it. The market's showing me what I'm looking for, I'm taking it. I'm putting my risk at the point of invalidation, where this trade is proved wrong. That is where my stop loss is going, and that's what I've been doing wrong recently. I've simply been placing risk at a point that I'm comfortable with losing instead of the point of invalidation that proves that trade wrong. In this case, combating that mistake, right? And I have all my problems lined out. So, I'll show you the work that I've been doing recently to fix these problems. Gotta pull up the mirror board every day. Come on. Come on now. So the problems that I have is I am lacking the skills of stop management and exits, because in terms of stop management, I'm placing my risk, my stop, at a point that where I'm comfortable with losing that amount instead of the point of invalidation. This is leading to early stop outs, and the opportunity cost for that mistake is $758 to $1,186.50 in profit that I could have made just risking an additional $154. So is that worth the risk? You tell me. So I evaluated all the opportunity costs for my mistakes, and I'm combating that in this trade right here. I'm not scared to risk $142 because I know what I'm targeting. This setup is worth the risk. I have confirmation. I'm taking it. I'm playing this hand. That's all I'm doing. And what do you know? It flips in my favor, right? So I take a partial here, and I took it really, really early. Now I took a partial at this 5-minute SIBI because I wasn't sure if it was just going to run right through this or if it was going to trade up into it and trade down and make a new low a day, like exactly what we did. So I'm very, very quick to lock in one contract, and that makes me comfortable holding on to the remainder of the position, because now instead of losing $146 on that trade, now I'm only going to lose $95 on the remaining two contracts, but I've already locked in $40. So really the loss on this trade is only going to be $50. And I think it's worth the $50 to figure out if this is going to deliver the full swing that I'm looking for in my pre-market plan and give me the objective in my pre-market plan. So now instead of just thinking, oh no, I don't want to lose this much on the trade, now I'm thinking this shit is worth the risk, I'm taking it. I'm detaching from the outcome. I'm detaching from the loss. I'm not look at the potential reward on this, right? $358 for the market to deliver the level that I'm looking for in my pre-market plan. And the potential drawdown is only $50. So is that worth it? You tell me. In my opinion, that's worth it. So I'm no longer thinking in terms of, oh no, I don't want to lose progress on my eval. Oh my gosh. I'm thinking, this shit's worth the risk. I know what the market can confidently reach for. I am confident in what the market can reach for. I'm targeting that. So that's trade one, and obviously I got stopped out on that. This setup, the second setup right here, I'm noting how the market dove below this low right here. We made a new low a day, and now we have an inversion fair value gap. The thing is look how it came towards previous daily low. It came literally a tick, maybe a tick or two from previous daily low. And from the way that I trade and the way that I look at the market, and what do you know, the market's delivering the level in my pre-market plan right now. I have to do this review before we close because I have things to do later today. But I mean, it's just good to see the market reach for your levels that are in your pre-market plan, and then go back at the end of the day and be like, yes, I had the correct trade. I had the correct plan today. But today was definitely an increased day of difficulty, 100%. This setup, I was not comfortable in taking because it primed previous daily low. It came 2 ticks shy of it and then turned it back inside the range. So in my eyes, the way that I look at the market, there is a reason for the market to want to trade back down there. So I'm not comfortable in buying the market unless it takes out previous daily low. And I was way too stubborn with this idea, and way too stubborn with the idea that the market has primed the previous day low and it's going to take it. So I absolutely wanted price to make a new low a day before I looked to buy it in my second trade. And it actually never ended up doing that. So I was way too stubborn and stuck up with what I wanted the market to do. And as a result, I wasn't able to capitalize the obvious setup. I mean, that setup was so obvious, right in front of your face. Inversion fair value gap in the price leg that removes sell side liquidity from the marketplace. That's a high probability change in the state delivery for me. And I know that's a trade that I would take 9 out of 10 times, but it did not take previous day low. It came just shy of it. So I don't end up taking that setup. So I don't like how it came 1 tick shy of Monday low and did not take it. At the same time, showing immense strength, pushing back inside the range, now climbing over first presentation. I want it to make a lower low, but it's showing me it's not going to. I saw the inversion fair value gap, but did not take it, letting the driver come out, think it would make a lower low on it. So now how do I get on size? That's basically the position that I found myself in after I did not take that setup because it primed Monday low. And at 10.10, I'm thinking I really would like to see a new low a day, remove all longs from the marketplace, then reverse. I am not buying this if we don't take PDL. I wouldn't be confident in a long because my stop is in jeopardy. There's a reason to go down there, and I'm waiting for it to happen around 10:30. And eventually what happens? We don't end up making a new low a day. So I was just really looking for the market to make a new low a day. Never delivered, right? What ends up happening is, and this is the setup of the day. Well, first of all, if I was confident in this idea, I would buy this knowing that this is going to become an inversion fair value gap, right? Trade down to it, respect it. This right here, this is also a clean setup, but at this point in time, it's getting really late in the session. I'm starting to lose focus. I read the institutional order flow entry drill, where it just simply goes a couple of ticks below this candle's low, dropping into that gap. I read the institutional order flow entry drill, but I don't act on it because I just want the market to make a new low a day because we came like 1 tick shy of it. And so really stuck up on the idea. I'm also noting the relative equal highs as the market, right, traded up here, did not take that high, then dropped down, cleared the sell side, inversion fair value gap, displacement, institutional order flow entry drill. It's also a balanced price range. So this is the setup right here that I should have taken. I'm not going to sit here and fucking frame it. What am I doing? But I mean, this is what happens when you demand that the market gives you what you're looking for. You know, you're gonna miss moves if you're not flexible. If you're inflexible and you're demanding, no, it's gonna do this, or I'm not doing anything. Sometimes you're gonna miss some moves, right? But for the most part, that's what tends to work for me because I'm looking for what's happening in my pre-market plan. In this case, I just did not feel comfortable with taking the market long there, and instead on the second trade, I end up buying this. But this is a strong lesson for the day. How I actually ended up taking this long right here. Okay, so show the recording of me getting in the market long here. So this is what happened at this point in time, okay? Now the market has broke out of the consolidation range with a lot of displacement, a lot of sudden energy, and I'm thinking, fuck. Like, I was extremely frustrated, extremely upset with myself that I did not take the institutional order flow entry drill. I didn't act on that. And I was so stuck up on the fact that this is going to make a new low a day or I'm not buying it. So when the market leaves that with a huge up candle, obvious displacement, I'm pissed at myself. I'm extremely mad. But then I'm thinking, what are you doing? Why are you allowing yourself to get frustrated like this? Why are you allowing price to have this kind of pull on your emotions? Why are you allowing price to influence you in this kind of way? You want to be a great trader, right? So if you want to be a great trader, do you think that great traders let market movements influence them in this kind of way? Do you think they miss a move and get really pissed off and feel like the market did something to them? Absolutely not. Absolutely fucking not. And instead, I use the new habit that I'm trying to build. I'm aware of the range between where that gap is that formed, that new gap that formed, and where my daily objective is for the day that we just delivered. And I'm thinking, there's enough range between here and there for the risk on this trade to make sense. So I take it. My stop loss is going to be below this volume imbalance for 20 handles. And I'm aiming for the consequent encroachment of that. Now, obviously, it didn't work out, but it still had range between, I'm going to delete these because they're in the way, between here and where I was confident in the low-hanging fruit objective in my pre-market plan. Check it out. Confidently aim for Asia buy side. Okay, well, here you go. Here's Asia buy side, right? And then beyond that, what am I aiming for? And above that, consequent encroachment of the Monday premium wick for easy low-hanging fruit targets. And then above that, consequent encroachment. Look right, and here we are. So I'm taking this long. I'm distributing along at this level. I know I need to lock in equity here because of the location of this trade. In order for this idea to work out, it literally just has to be a straight shot. The market has to get extremely strong and it just has to go. And because it wasn't doing that, because it was showing me that I was struggling at Asia high, and I started to see large down candles come in, I just took off the remainder of the position. I know that it's going to have a retracement, and I'm not in a comfortable position for me to tolerate a retracement because I'm literally buying and I'm premium at this obvious gap. So in order for this to work out, it just has to go. Now, I wasn't getting the confirmation that I was going to. I was struggling to accelerate through Asia high, so I know we're going to come back inside the range. And like I said, I'm not in a comfortable position to tolerate a retracement here. So I take it off the remainder for I don't even know how many points. And I finished today up only $50. But you know what? This was honestly a really tough session for me, extremely mentally draining based on the fact on how long that I had to wait for this to play out. The fact that I couldn't even trust this, but I didn't know if I should trust it or not and just take it. In hindsight, what I realized when I was reviewing today was this was worth the risk, right? Because from the way that I'm retesting all the back-tested samples that I have of my model to try to figure out exactly where I'm going to place my stop loss, I know that if I'm taking an inversion fair value gap, I can literally just place the stop loss below the inversion fair value gap. 9 out of 10 times, it doesn't color outside the lines and it respects it, like exactly what we see here. So that's only 12 handles of risk. I think it's worth the 12 handles for the potential 98 handle reward that it actually ended up delivering, right? But I never even framed the risk on this setup. So to me, it's never even worth the risk because I don't give it a shot for it to be worth the risk. So in this case, I wasn't willing to play that hand. Now to be more safe, I can put my stop loss below this candle's low because we have a little imbalance right there that it does trade down into. But even then, it's still 5R, 5 times what I risk. In this case, I'm just not aware that it's worth the risk. So for the most part, I combated my goal in a really good way that I'm proud of. Now, obviously I missed that setup, right? But I called the goal progression today a 10 out of 10 because I framed my stop at a point of invalidation. I was aware that my trades were worth the risk besides that one setup. And working on building the skill of exits, the daily objective was stated in my pre-market plan with the annotations pre-market. I was aware of my daily objective and the range intraday, and I got out at my daily objective on that one trade where I was able to exit at Asia buy side. So not a terrible session, right? And my post-market analysis got a lot more black and white. If you see my previous videos, you know I used to have a lot of stuff here. But all I need to know after the market is closed, after the session is done, and I can go back and review what the market actually did was, did my plan deliver? Yes or no? And how did I execute on it? That's it. So I failed to execute on my plan today because it delivered PDL, came just shy of delivering it by 1 tick, and I couldn't trust along there. even though it presented my entry model clear as day. So that's the breakdown for today. And so the main lesson, the biggest takeaway from today is don't get frustrated. Find a way. Because after I read the institutional order flow entry drill and I didn't act on it, then I saw price break out of the range. I got extremely frustrated with the market in this condition. Then I realized how I was allowing myself to feel the influence price had on my emotions. If I want to be a great trader, price fluctuations cannot have this kind of pull on my emotions. I shook it off and framed the risk on the obvious gap. And because I was aware of the range, it was worth the risk. So I took it. The only reason I was profitable today. So I just keep stacking lessons. I didn't come out as a red day. It's a green day, only $50. It's basically break even. But I learned a lot, obviously. And it's a step in the right direction for me because I am following my protocols. I'm building the skill of stop management and the skill of exits, which is what was completely neglected in the way that I've been back testing. I completely neglected that because most of my focus, my intention was around just framing these playbooks and building the criteria of these playbooks and making them make sense for me. Now I have to go back and figure out, okay, this is exactly where I'm going to place my stop and this is exactly where I'm going to get out at. And that's it. So that's it for this session. If you enjoyed this review, let me know in the comments. If you have any questions, if you need help with anything, let me know in the comments as well. I answer all of them. And I appreciate you for sticking around to the end. And I'll talk to you tomorrow with another trade recap.